The Income Tax Act 2025. Today is day 36, and I am starting with Section 58 of the Act, which is about presumptive basis for residents. It has three businesses covered. The first one is any business which is conducted by a resident individual, HUF, or a firm. But the word firm does not include LLP in this case. So if a business is conducted by a resident who is an individual, HUF, or a firm, then he will get the benefit of this section. But there are certain businesses which are not covered. These include profession, agency business, commission or brokerage business, and this section is not for transporters because there is a separate serial number for them. What this section says is, in case they have a turnover of up to 2 crore rupees, they can claim PGBP at the flat rate of 8%, and they don't need to maintain books of accounts or get their books audited. They can simply claim 8% of their turnover as PGBP income and pay the taxes thereon. This limit of 2 crore increased to 3 crore in case the turnover is, if cash turnover is only up to 5%, which means in case we have 95% or more turnover through specified banking modes, which means account pay, check, UPI, NEFT, RTGS, or any other specified mode. So in case we have 95% or more through specified banking modes, the limit becomes 3 crore, and we can claim PGBP at the rate of 6% on the turnover which is through banking mode. So let's assume a case where the SSC has turnover of, let's say, 1 crore rupees, out of which 95 lakh is through banking mode. So on that 95 lakh, he will claim PGBP at the rate of 6%, and the remaining 5 lakh rupees, which is through other than banking modes, he can claim it on 8% rate. Here's an example, but there's a condition about 6%, that we should have received the payment through account pay, check, or banking mode up to the due date of return of income. If we receive after the due date, it is considered as cash transaction. It's treated the same way as a cash transaction is treated. This is an example where we have cash 50 lakh rupees, so we'll use 8% rate. Then we have NEFT, we use 6% rate. UPI, we use 6%. RTGS, we use 6%. Here NEFT, we are using 8% rate because it has been received after the due date of return filing, and because this is an example of an individual SSEs for whom the due date is 31st of July, so he has received it after the due date. That's why we are taking 8% rate of PGBP. Now there are some notes about the same. The SSC can show more than 8% income in case he wants to show. There is no need to maintain books nor audit is required. Now, if the SEC wants to declare income of less than 6% or 8% of income, and he has a total income which exceeds the basic exemption limit, which means 2.5 lakh in case of old regime and 4 lakh in case of new regime, then he has to maintain books of accounts and get them audited. This becomes compulsory. Maintenance of books of accounts and audit becomes compulsory for him. Then there is another condition where the SEC who is opting for this presumptive basis, he has to stay in this basis for next 5 years. In case he opts out of this, he has to then he will not be able to claim the benefit of section 58 for the next 5 years. Then this is an example where an SSC is claiming the benefit of section 58 in tax year 26-27. Now he has to stay in this scheme for the next 5 years at least. So he stays in that scheme for tax year 27-28 as well, but in tax year 28-29 he wants to declare an income which is less than 6% of his turnover, so he opts out of the scheme. Now what happens, he will not be able to claim the benefit of this scheme for the next 5 years as well. Means he will have to maintain books of accounts and get them audited for the next 5 years as well. But the condition again here is, in case the total income is more than the basic exemption limit. There are a few more conditions like this. Any loss, allowance, or deduction otherwise is not allowed when he claims deduction on presumptive basis, and there is one exception in it, which is remuneration to partners, salary and interest paid to partners by a firm. in case of transporter business. This is an exception. Moreover, there is the case of assets. This says that we have to keep computing the WDV of asset like we are computing it on a normal basis, even though we will not be able to claim any depreciation, because it's kind of like when we will opt out of it, we will be calculating depreciation on the calculated WDV. Otherwise, we'll not get the exact value. That's why this is there. Moving on to the next type of business, serial number 2, which is regarding the plying, hiring, leasing of goods carriages or transport business. This applies to any SSC resident, any SSC who is a resident and has maximum 10 vehicles at any time during the year. What happens in this case? In this case, there are no limits like 2 crore or 3 crore, but and there is no percentage of turnover. In this case, how we calculate income is, we take, in case the SSC has heavy vehicles, which means they have a gross vehicle weight of 12,000 kgs or more, not 12,000 kgs, more than 12,000 kgs. In case of 12,000 kgs, it will fall under other vehicle category. So in case there's a vehicle having gross weight of more than 12,000 kgs, we will compute his income as rupees 1,000 per ton of gross vehicle weight per month, or part of month means in case we have only few days for a month, we'll take it as one complete month. Now in case we don't have gross vehicle weight available, we can use the unladen weight, which means the weight without any goods in it, and then multiplied by rupees 1,000, and then number of months it has been used for, it has been available for use actually. But in case it's not a heavy vehicle, means it is equal to or less than 12,000 kg, we'll take it as other vehicles and we'll calculate as rupees 7,500 per month or part of the month. See here, it is 7,500 per month. It's not per ton. In the first case, it was rupees 1,000 per ton and then per month. So there is a difference in these two. And then there is a clarification regarding in case we purchase a vehicle, let's say on 19th of July, and then we put to use it in August. So we'll start counting the number of months from July only. This is not a case of assets where we check the date of put to use. Here we calculate as soon as we purchase the asset. There's another clarification: in case the vehicle was in garage for repairs for 3 months, we will still be taking the income of those 3 months. It's not taking into account whether the vehicle was moving, it was on repairs, or whatever. We just calculate the number of months and then the weight, the tons of the vehicle, and then multiplied by rupees 1,000, or we calculate it as 7,500 per month. The third business is specified profession. This serial number 3 applies to resident individual and resident firm. Again, LLP is not included in the definition of firm for this section. It says in case of specified profession, which includes medical, accountancy, legal, engineering, film artist, IT, technical, or company secretary, those professions. It says in case they have a gross receipts of up to 50 lakh, they can calculate their PGBP income as 50% of the gross receipts. Again, they will not be required to maintain any books of accounts or go through any audit. They can simply claim 50% of their turnover as a PGBP income. Now, they also have the benefit of banking transaction. It says that if they have cash transactions only up to 5%, then the limit becomes 75 lakhs. Section 15. Here is an example of transporter business. Yeah, this is a clarification about how we compute whether a transporter will be liable for audit or not, because we saw earlier that transporters don't have a turnover limit of 2 crore or 3 crore. They can have any turnover, their income is calculated regardless. Now, how do we know if they will be subject to audit or not? We'll not consider the income as a transporter while checking that. So in this example, the transporter has income from plying, hiring, or leasing goods of rupees 8 crores. Normally, it would exceed the threshold for turnover, but we do not take this into consideration. We'll only take into consideration his income from any other business, which in this example is only 70 lakhs. So he will not be liable for any audit. The last 2 points is Section 62, 63 shall not apply to transporter, which is what I explained in this example. NSSC possessing a goods carriage on. This is about a transporter who has a goods carriage, but he has not purchased it yet. He has obtained it on hire purchase or installments. He will be deemed to be the owner of this section under this section.